Hey traders, checking in on the stock market today. So we had a very notable bear day today with control for the majority of the day, leading into an hourly oversold bounce into the close. We'll take a look at the different sectors, who was hurt most, who stood up the best, and what are we expecting in the short term from here. Stay tuned.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we'll start off on the 4-hour channel on the S&P 500 futures chart, which we have been watching over the last few days. We started with a very clear rejection. Well, let's go back. We ended last week right at that resistance. And so we could easily say we're going to start Sunday night into Monday with either a clear bull break or a clear rejection going right back within this range. We started Sunday night with a very clear rejection right out of the gate. Then the weakness picked up significantly today with all of our major sectors at the low of the day at the same time, and we broke this downtrending support line. Since then, we have seen an hourly oversold bounce, which is significant enough to be looking for an hourly equilibrium to form. Before the last little move up right into the close, it looked like an hourly bear flag, but that was enough follow through right at the end there to be watching for an hourly higher low to form. Question overnight is, can the bulls change the hourly trend back in their favor, or do we stay weak overall? Daily time frame, we can see that lower wick is forming. I am finding the most clarity on the weekly time frames on a ton of individual names. If we look at the weekly equilibriums, high, low, lower, high, and we're scouting a higher low, and we're watching this on SPY and QQQ and 100 plus individual names. So we have Thursday, major earnings day for the tech sector. We're talking Apple, Google, Amazon, Facebook, and that's going to have short-term impact. And then we have the election a week from tomorrow, which is obviously going to have a short-term impact as well. What I would love to see when all the dust settles over the next 2 weeks is just a weekly higher low looking to form compared to the low of September. And then we'll watch this equilibrium breaking into the end of the year to dictate momentum to start 2021. In a perfect world, that's what we would get for clarity. So I'll be watching for plays off of weekly support, 319.80 on SPY. If we get a bearish reaction from the tech sector earnings, if the market pulls back initially on the election results, that's something I'm watching for. As far as the short term is concerned, SPY definitely a notable drop to a lower low. We were very close to shifting momentum at the end of last week, where we started to see closes near the highs and some lower wicks, but again, rejected. Want to say something that is more of an observation and gut initial reaction, where to me this morning and how things played out, it seems like coronavirus headlines matter again, at least for today. Why do I say that? Because number one, the magnitude of the weakness in the broader market today. Number two, the magnitude of the weakness in the airliners and cruise liners and the financial sector and all of our corona overexposed names, let's say. And also seeing the morning start with strength for our stay-at-home stocks, whether it was ZM or DOCU. These names held on way better than any old regular stock today. So just a very slight observation, and knowing that the coronavirus numbers have not mattered and the headlines have not mattered to the market over the last month plus, I'm now just going to be paying attention more. I want to see how the bots and the algos react to any headlines that come out relative to the subject, and just paying attention. We're always watching. I mean, since the low back in March, we've been watching the relationship between the tech sector and the leaders and the laggard sectors, financial, airliners, etc. And that's just coming back in the forefront today with the overall weakness. So long story short, just an initial observation, initial shift that I'm going to start paying attention to again and see where we go from here. IWM, bear break of 158.81. Bulls bought the dip. There's a nice lower wick. It's keeping that weekly consolidation healthy overall. We need hourly trend changes back to bulls. If we don't change hourly trends, we know the bulls aren't proving anything to us. So on IWM, Anything under the high of today is an hourly lower high. We then have to hold the low of the day and change the hourly trend to shift that short-term momentum back to the bulls, who had it on Thursday and Friday, but obviously lost it with the entire market today. QQQ, notable leg down. Looking for the weekly higher low in the equilibrium. Again, if we have a bearish Thursday for all the tech sector earnings, we can drop 6% and still be holding support. So we're keeping an eye on our weekly support. Look at how many closes lower than the open we've seen in a row here. 2, 4, 6, 8, 10 times in the last 9 times in the last 10 days. We have closed lower than we have opened on QQQ. And you're going to be hard pressed to find a streak like that, even in the COVID dump. I don't think I'm supposed to say that word because I don't think the algos and the bots on YouTube like me saying that. So likes and thumbs ups and shares to offset me using bad words. But wasn't anywhere near that as far as that many days in a row with the close lower than the open. Hourly trend must change. And that is something that we have not seen happen. Look at Thursday. Drop, bounce into the afternoon. Friday, morning drop, bounce into the afternoon. Today, held the low Friday first thing. Great bounce off that support level. And as soon as you see that significant of a bounce roll over to a new low, at that point I said in the chat room, be very cautious. This may be a waterfall day because all of our sectors were at the low at the same time. And QQQ went from a double bottom and real strong just to giving it all back and collapsing. Hourly trend changes needed back to the bulls on all sectors. XLF, 2451 support broke. Again, the 2-week equilibrium here into the end of the year is going to be key. High of 2683. Low, lower high, higher low. Lower high now set at 2559. And we're looking for a higher low compared to 2294. And I will be watching this pattern very closely as we head into the end of the year. Healthcare sector broke support as well of 105.57, but not a whole lot of follow through. So we're seeing healthcare, financial sector, and IWM all with some lower wicks. The question is, can we change those hourly trends tomorrow? Biotech sector held support of 113.84. Have to see a bull break of 117.87 now to call that a little daily trend change and to set a weekly higher low, which is still happening at this point as far as still being healthy weekly consolidation. SMH, look how similar it is to QQQ. How long have we been talking about the semiconductors and the tech sector doing the same thing, except the semiconductors were stronger? Same pattern. 9 of 10 days in a row, we have closed lower than we have opened. Today was a notable high volume flush day after, again, look at the shift in momentum. Close at the low of the day, 4 days in a row. Close near the high of the day with lower wicks to end last week, but no follow through on the verge of that shift to short-term bullish momentum. We rejected very hard. Looking for a weekly higher low with tons of space to do so. Hourly trend change needed to shift momentum. And again, it's a little bit choppier with extended hours on. Take extended hours off. We have not changed the hourly trend bullish in a very long time. It's just a clear guide where every bounce is an hourly lower high, and we're looking for that to continue, at least on the current bounce, with how much we pulled back this morning. Solar sector double bottom 10 at 68.17. Bulls would have to break 73.08 to set a weekly higher low already off of that support level. Definitely going to be paying attention to that support level tomorrow. JKS, I've been day trading a lot the past few days. It's an inside bar with a bit of a base of support being established. The VIX, big move. This is the most notable day. And look at the difference here. You look at SPY, and you can say, well, SPY had a worse day back on October 19th. And that may be the case. Look at the VIX on October 19th. Much different than today. And today felt different to me as far as the broader market. Today felt like the weakest day, aside from the last 2 hours and the oversold bounce. But the first 4 hours of trading today, it felt like the weakest day that I've seen in weeks and weeks, even more so than October 19th. So the VIX easily breaking now over all these resistances and looking right back up at 38.30. And that is a weekly shift here. So let's see if the bulls are able to change the weekly trend back in their favor. All about 38.30. I did enter a bearish position on SPY into the end of the day just because that bounce was significant, and it's a smaller hedge position where my exposure to my USMJ swing bull positions will be a little bit protected if we were to see a lower open tomorrow and weakness overnight. The dollar, still a potential daily bear flag, but a very different candle compared to what we saw on Friday. Friday was closing near the low. We're back up near the high of the bounce. Bulls have to break 93.13 to try and negate this daily bear flag. We would still be looking for a lower high compared to 93.90, but it would start to create the space for the potential daily trend change, which we always are keeping an eye out for as long as we're above 91.74 and the potential of a weekly higher low compared to that level remains. Always watching for the bulls to try and change this daily trend, which they've been unable to do so far. And that's another reason, another point in favor of what I talked about with coronavirus. Can't say that. The headlines mattering more. The dollar is not seeing significant strength today. Yes, it's seeing strength, but we don't have a big green significant move leading to weakness in the broader market. In my opinion, the weakness in the broader market does have more headline relation than normal. Gold. Support of 1882. Just watching this tightening range. Again, I don't care what gold is doing as long as it's between these two levels. We rejected from resistance. We're holding support. Could remain that way the whole week. Bit more clear of an equilibrium on silver, but it's the same deal. Still holding higher lows and still range bound. And it is very notable that the miners are confirming daily downtrends, and we're at the low of the day today, and we're pretty much at the low of October 7th. And if metals were at the low of October 7th, they would be down at 1872 on gold right now. That's over 1.5% away. So we continue to see the miners weaker than the metals and not positioned well. If these miners or if these metals lose these daily higher lows, the miners are not positioned well at all for that. We're going to be right back down at the weekly low of consolidation, 37.08, if that happens. Oil had a short-term bear break. We were watching this range, 42.02 resistance and 39.36 support. We broke short-term support, so now we zoom out. And we know 37.11 and 36.93 are now the most important support levels. If those levels come into play in the next day or two, there's a nice oversold bounce, bottom fishing play off of those supports. But the weakness in oil was present this morning before the weakness in the broader markets got significant, and that was a potential little clue there. Oil dropped to a lower low at 10, and at that point in time, SPY was still near the high of the day. Natural gas, daily bull flag confirmed. New short-term support is 2785. And looking up at 3 psychological resistance. As long as 2785 is holding, the bulls have complete control. So short-term, I don't have a lot of confidence at all in direction we're going to see overnight. We could open green and higher. We could open red and lower. And that to me is pretty much a 50-50. So I have no confidence in short-term direction. If it were 11 a.m. and the market were still trading right now, I would be watching for an hourly lower high, bearish entry, absolutely. But we bounced enough that I would then be watching for an hourly higher low and a potential bullish entry. So this definitely gives me clarity, the notable range in both directions, but obviously that's going to change overnight tonight and the next 13 hours of trading. So again, just to summarize a bit more, the observation that I'm noting in the shift where coronavirus headlines matter a bit more today is just an observation. I'm not making any actionable trades off of that. It's just something I'm watching now for the rest of the week. I'm watching how XLF and all of our laggard sectors are going to be trading comparative to our tech names and our stay-at-home names and our high flyers, like we used to call them, and just watching the relationship between those two groupings, because today was a little bit of a jolt as far as being systematically range-bound over the last 2 weeks, and now that range has opened up a little bit, obviously in favor of the bears. So I appreciate you watching. Do good things, and we'll see you tomorrow. Stay protective. And I'm still working on that. Preparing for the next crash video. I'm probably 60% done. Probably Thursday or Friday. There's already been a raccoon trying to get in there. Gotta help him out.